Welcome back, traders. Make sure to stay until the end of the video because do we have a juicy one today? It's going to be very, very intriguing and interesting to go over Nio on a macro scale and give you guys the set kind of key price targets to look for to the downside. If the market does indeed find this leg down, just analyzing and looking at the bigger picture to see just how much support we have new founded. I mean, this was not support that we had back when you were at $3, $4, even $5, but it is support that you have now and that you may come back to test. So make sure to stay until the end, slap the button, the subscribe button if you guys find value in this. And because we're not just growing people's portfolios, we're growing your mind, right? So make sure to stay until the end. Nio Stock, though, doing something very, very interesting, gapping down twice in 1 week. You saw the first gap down here on 11.6. And then the second one today, you saw the gap sitting at, what is that gap at? 659. So let's just call it 660. And the other one sitting at 711. Shout out to my boys at 711. But you printed a hanging man candle today. Not your best candle, right? Not your best candle at all. But let's look at the micro and let's see what support you're coming to here and why it means such a big thing. The support that you're coming to, and I've outlined this on the horizontal as well, because I wanted to get the exact number that you're looking to hold as soon as this week, right? Friday, it's going to be important to hold this level. Sitting at 626. Now, what is 626? Well, 626 is two things. It's your previous low, and if you want to maintain this current higher low price action, which is a bullish thing to do, you're going to bounce. And you're going to bounce soon because your previous low was sitting at 628. So let's just say 628, right? So you want to see this either double bottom or green open tomorrow based off of the government reopening. I mean, it's 621 here where I am right now. And they will be voting soon. So 626, 628 is where you want to see this thing bounce if it is short-term bullish. Beyond just the higher low scenario, we also have, zoom all the way out, guys. When in doubt, zoom out. This is your key reflection point in this stock's history. If you are going to find a bounce, it's going to be very important that it happens soon. And the reason is you had your all-time high resistance trend. You see, smash down, smash down, smash down. It's tight, but you did tap it. And then you came all the way back. And then you broke above it, retested it, and sent for another high. Now, if you're able to hold this, or at least trade alongside of it, maybe a bullish reaction doesn't happen right away. I'm just inclined to think that it will, right? But if you can just try to trade along this, eventually you will catch up with this 200-day EMA, and that's going to be huge, and that's why I have this kind of circle, triangle, whatever you want to call this box here, right? This is your resistance zone, guys. If you drop this support, I would anticipate you see this boom, boom, right? Because of the multiple lines of support you have within this box. Just within this trading box, guys, you have multiple significant resistances. Not only do you have the 200-day EMA curling up at a rapid pace while you go down in volume, right? Let's not neglect that. Neglect the downtrend or exhaustion of volume. But you also have your 556 horizontal resistance. And 556 or 560 is such a crucial level to this stock's history. If you just take a time, like take a step back in time, come with me here and just look at what your exact bottom was here. It was 560. Now, what was your close here? Your close was 554, and you wicked above 560, rejection. 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 Close above. pop after you break it, right? This is a consolidation right beneath 560. So 560 is going to be absolutely critical as you continue to go back. You see smash, 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 bam, bam. And it goes all the way back, guys, all the way back to IPO. Just want to make sure I have my ducks in a row. This was 560. Yep, 560 right here. Bam. Break above, retest, and smash. This smashed you down absolutely from 560 all the way down to $2. And then it was your support off of IPO. So there is truthfully no more significant support and resistance than this golden trend line at 560. Now we talk about 771 being the bull gates, right? That is the key level that you want to smash through if you're going to swing this thing in the other direction. But equally to that, as equally as important to support is 560. So the fact that you have that technical confluence there, right? You have your 200-day EMA, you have your 560 horizontal line, and you have this newfound support line that just so happens, right, to have 1, 2, and a potentially going to have its third tap if you do trickle down beneath this all-time trend line. And so that's why I kind of have this circled as just look at how much is going on in that triangle, circle, square, whatever you want to call it, right? You also see the gap fill here that you left off of this absolute rip candle sitting at 514. So there's even a scenario if you drop 560, it wouldn't be good, but you can gap fill this the same way you did back here, right? You see this gap that was left at 629 off of this absolutely full send candle, right? You freaking split grass and you know what. You then absolutely capitulated from $8. And what was your close? 628, 1 penny off the freaking gap fill. I would not be surprised if you see something similar here, if you see a broader market downturn, but we should be prepared for anything that happens, guys, for a potential swing up, for a potential swing down. And your profit target, or at least not your profit target, but your resistance lines, if you swing back up here, you have this established downtrend that could potentially smack you if you go to fill the gaps and then reject. And that is right around that 711 territory where the gap fill is. So there is a very real scenario here where if you don't capitulate, you come back up, you fill the gaps, and then you continue, right? You continue this sideways price action until earnings, and then bam, because I think we all know that earnings are going to be outrageously positive, in my opinion, right? Not financial advice, but you look at the fundamental thesis that has been building for this stock, and it's pretty undeniable. It's pretty undeniable. Even if you are a bear on this stock, it is hard to hate what you're doing if you're a Nio CEO or shareholder or representative, right? So that is just the daily time frame. I didn't even get into anything else. But the daily time frame, that's kind of what you're looking at, right? We talked about 628 being very, very crucial going into the end of the week. And then you have your horizontal trend at 560. Let's get into the weekly time frame, because the weekly time frame also fascinating. You have a couple different things that I've been watching develop. And the first thing is, like we said, this capitulation in volume, or this drying up of the stock's volatility. You can see here for the past 2 months, you've just seen nothing but bare bones price action. It's not surprising. After you've seen such a such a vertical move, it's not surprising at all to see this thing take a breather, right? I mean, it's bound to happen at some point. And the fact that you're doing it and holding strength in this local area and not rejecting all the way back down like you did here, because that is a very possible scenario, right? You see what you did here. Tap 771, and that just led in the same amount of time frame, right? This was how long? 100 days and you went down 50%. That is disgusting. But additionally, if you did find a bottom here, I would expect that test of 771. And if you are able to successfully break above 771, guys, this has been the absolute bull gates. This has been the absolute bull zone if you break above. You saw the smash down here, but you go all the way back. You tested it here and you sent multiple hundreds of percent. And then this was really your breaking point in the stock. You saw how vertical you got the next two weekly candles after you broke it 36% and then 60% on Nio Stock. That is insane. It's absurd, right? So we're watching for two things here. If you're long-term bullish, which I'm sure if you're here, you are, right? We're watching for the break of 771 to the upside coming into earnings. And we're watching for this weekly golden cross. Now, what is a weekly golden cross? You may ask. A weekly golden cross is something that shows significant bullish momentum, which is your 50-day EMA crossing above your 200. And so what this is basically telling the investors, the hedge funds, the institutions, is that Nio Stock on the short-term trend has now overlapped the long-term trend, that the short-term trend is stronger and more bullish than whatever the long-term trend is. And the fact that you have both of these things beginning to curl up, the 50 you can see is beginning to flatline, which is much better than having one when it's absolutely radically going down. When they're both curling up, for me as an investor, I see that this stock is on the upright. You can see that your moving averages, which is just over the span of 50 days, what is your average price? Or in this case, the last 50 weeks, what is your average price? If you can see that your 50-day and your 200 are beginning to slope up, guys, your price is going to slope up. It's going to go crazy. And if you do see this drawdown, just so happens to see that this 50 is going to meet you at 560 at the exact same time. So what I am watching is even if you don't hold this trend line and you come back down and everyone's losing their mind, you should, in my opinion, not financial advice, there is no better time to be bullish on this thing because you are confirming this as support, just like you did back here, confirming it as support and then launching higher, especially if earnings come back green. If you come back and you cut continuously costs, grow your top line, grow your deliveries, this thing is going to go insane. You know what? Ape-ish. So that is the weekly time frame on Nio Stock. I did have one thing I wanted to say on the monthly for Nio on TradingView, and that was the Bollinger Bands. Bollinger Bands also uniquely in a very similar location at 499. This midline is going to continue to curl up and act as support, hopefully, for these pullbacks as you continue to ride the wave, right? Because you can see here, this midline was significant resistance. In fact, it slapped you down, not just once, but twice and three times. 1, 2, 3, 4 times even. It slapped you down. You could arguably say 5 and 6. You wicked underneath, and then you finally broke above. And what this allowed for was the expansion of these monthly Bollinger Bands, which have never been so tight. So if that were to occur, and this is just a retest before you continue to expand the Bollinger Bands, I would expect this thing to get a little crazy here soon and a little volatile. But furthermore, I just want to take a step back and say, look at the macro. I'll get rid of the Bollinger Bands temporarily, right? But look at the macro of the chart. If you see this drawdown, not only are you retesting 560, but let's say you go into this uptrend here that you would hopefully catch somewhere between $4.50 and $5. you would be establishing this shoulder, head, shoulder, or this cup and macro handle. And what that basically accomplishes here is the exact same setup as you had the first go around. So very much like a lot of your other risk on assets, you have a very similar structure to your bottom as IWM is near all-time highs. And the important part about this is you take the price target, and not only did you outperform the price target, you had a blow off top, and then you consolidated. But theoretically, right, let's take this price target. And although it might not look as lucrative, you very much have the opportunity, if these things continue to snowball, this takes you up to $16. We know that that is a significant area of resistance, as that's where you had your previous shelf, right? That you're going to bump your head on. But you also have a shoulder here. So you have the opportunity to make a head and shoulders within a head and shoulders, and that snowballs and compounds until eventually you get Nio 100, right? I mean, it's very interesting to see how stocks do this, but they so often do. So that's your neckline, right? And then that takes you to $81. Now, if you outperform that, and this is saying theoretically, right? If you saw some kind of shoulder break, and then you make a shoulder break, then theoretically, right, that is your passage. That's your thing, right? Come on. You see this U-shaped accumulation pattern, very similar to Carvana, and nothing's a guaranteed ride, right? You have so much instability and questions within this run, but this is just a scenario that I think is possible within this stock. Looking at the schematic and looking how similar it looks. However, I wanted to get a little bit more into IWM. Don't click off the video, because this is probably one of the most important parts of the video. And slap the subscribe button if you guys found value so far. I appreciate each and every single one of you guys. IWM, doing something astronomically important to the stock's history. And let's get rid of these Bollinger Bands. IWM is doing something astronomically important to the risk on assets history. And I say this because, let's go to the quarterly chart. I say this because not only is Nio set up pretty much the exact same way it has ran in past, but so is the risk on assets basket, or the index that runs everything else, right? I mean, it runs crypto, it runs, not quite literally, but it does run in tandem, AMC, GameStop, and a lot of the other small cap stocks. You look here and you look at your setup on the RSI and the chart. Your setup on the RSI was this triangle, this ascending triangle or descending triangle, whatever you want to call it, right? You can see here you have pretty much the exact same layout as 2008. And I'm not saying that it's the end of the world, right? But you look at this setup, this strike down, and then smaller strike, like this cup and handle, and then you see this cup and handle, right? You see this flat side resistance, you see this flat side resistance, you see this triangle wedge on the RSI quarterly time frame, triangle wedge on the RSI quarterly time frame, and then you broke. And so you are now sitting, consolidating on top of your all-time highs. Meanwhile, everyone and their mother is telling you to sell your stock and your positions. I don't buy this, guys. I don't buy this. You look at every other time on the stock market for IWM that you have been at a flat side resistance. And what has come after that? Substantial price discovery. You look here, flat resistance, break. Flat resistance, break, right? Flat resistance, break. Flat resistance, break. Flat, break. It's just how this index, this basket runs. So it's fascinating to see that we are quite literally set up with the exact same layout, and everyone is bearish. Not me. I'm not bearish. I'm not selling. So just take a moment, look at the chart, look at what we have accomplished. subscribe. That's all I got to say, because this is beautiful. You look at the fear and greed index, extreme fear for crypto and fear for the stock market. Meanwhile, we are looking at the macro picture and everything looks fine. So if you guys found value, join the Discord. It's free, right? Slap the subscribe button and tune in for the next video. God bless each and every single one of you guys. I love you and good night. Woo! Oops.